I caught up with business reporter Chris Leonard as the Fed was announcing another rate hike, moving at the fastest pace in 40 years.
Good afternoon. Today, the FOMC raised its policy interest rate by 0.75 percentage point.
It can be a little bit hard to understand because you hear, okay, the Fed hiked rates today to 3.5%. Well, what does that mean? That my credit card rate is going to be a little bit higher, or I'll have to borrow more money for a house? He is talking about a fundamental restructuring of the financial system. The financial system globally has been built around extremely low, ultra low interest rates for 10 years.
My colleagues and I are strongly committed to bringing inflation back down to our 2% goal.
I think people don't appreciate the magnitude of what the Fed did over the last decade. And so this is going to be like a long-term thing playing out over time, probably over like a year or two of shifting to a higher rate environment and then the correction that that's going to cause. So he's talking about a huge adjustment that's not going to be an adjustment upward. Things aren't going to get easier. Things are going to get harder.
Tonight, the economic alarms are blaring.
The specter of this kind of economic upheaval has heightened concerns about a recession.
And the Fed has made it clear its #1 priority is fighting inflation, even if it means the jobless rate, unemployment, goes up.
Good evening! Are we going to let this corporation stop workers from joining a union?
It's also raised fears of layoffs, which has aggravated the organized labor movement.
I'm here with 12.5 million union members.
Liz Schuler leads the largest labor organization in the country and has been urging the Fed to slow down.
Listen to your workers.
We met with Chairman Powell and 6 Board of Governors because I think the Fed doesn't often get to hear from actual working people and how they're seeing things in the economy.
What was your message for the Fed when they started to raise rates?
That raising the interest rates is bad for working people, that we think it puts the trajectory that we're on at risk in terms of coming out of this pandemic. We know that we're in a consumer-driven economy, right? And if working people are not able to make ends meet, they're not going to be buying goods, and it's going to grind the economy to a halt. We can't take aggressive moves that are going to throw people out of work and basically balance the economy on the backs of working people.
But I mean, the Fed is tasked with controlling inflation, and inflation is definitely bad for working people. So why advocate for the Fed to take its foot off the pedal?
Well, because the interest rate hikes they were implementing were happening quickly, and we thought it was happening too fast. And also, though, their tools aren't necessarily going to impact the things like gas prices and food prices, which is what most working people are worried about.
The Fed doesn't ever want to say this out loud, but their goal is quite literally to make businesses not want to hire people or to get businesses actually to lay people off. The Fed has estimated that the unemployment rate under their very rosy projections by the end of this year would rise to 4.5%. There is no real way for unemployment to get from 3.5% to 4.5% without millions of people losing their jobs.
I understand the best case scenario being that you bring down inflation without unemployment going up, and that somehow we avoid a recession. But if employment does stay strong and inflation stays high, then don't you have to basically hurt the jobs market? I mean, isn't that the bottom line here?
We are going to have to keep raising rates until we get inflation back down. That is absolutely true. And one of the sources of optimism, and it's mild optimism, is when there have been recessions that have been caused by the central bank raising interest rates. The good news is once inflation is in check and they reverse their policies, the bounce back can be very quick. So we're not trying to engineer a recession, but if one were to happen, I feel pretty confident that we could have a very fast recovery.